Welcome everybody to the weekend report for October 27th, 2023. I want to talk about what's been in the news this week. Going to start with inventory. There's been a little buzz about the fact that inventory numbers have bumped up a little bit, but I do want to share with you this particular chart that does show that this is actually kind of normal for this period of time. So while it's great to see a little bit of an anomaly, it taking a little bit longer, the inventory is sustained, been up a little higher than normal. This is just par for course. And you can see from this chart, we're still well below what we would consider normal levels for inventory, and certainly well below what we need in this market based on the amount of demand that's out there. So while, yes, it's good to see inventory numbers up a little bit, they certainly don't meet the demand that is out there. Also this week was new home sales. So this is new builds. So we had about annualized pace right now at about 750,000. That's up 12% month over month. But the actual inventory, what has been completed, is 75,000 homes. So that's actually the number of homes that can be closed on that are ready to deliver to the buyers. There's still a fair amount out there that they're either in the process of being built or dirt starts. So nice to see that this number was up, but again, the actual completion number well below what's available out there. Median home price did drop down to 419,000. Not necessarily surprising because remember, median values assess the number of homes where 50% sold over that number, 50% low. So that just indicates that probably homes on the lower price point sold more so in September, dropping that number down just a little bit. Big news this week was the PCE report. This is the Fed's favorite measure of inflation. They do watch the core number. And with the headline number, it was up 0.3% year over year. It was down to 3.7%. The core number, which is what they like, the headline number was up 0.4%. The core number was up 0.3% from month over month. But year over year, which is the number they track, is now down from 3.8% to 3.7%. So we are still seeing that inflation number come down, just not moving quite as fast as the Feds would like. Now, again, it's good to see that the numbers are getting better with inflation. But let's take a look at what's going on within consumer spending, because consumer spending is that's what's driving these inflation numbers, these numbers coming in higher. People are continuing to spend money. And interesting enough, if you look at what's going on with the savings rate, month over month, it continues to go down. So while people continue to spend, they're not saving money. They're running out of money, so to speak. And if you look at this juxtaposition here between this top chart being what people have in savings versus the bottom chart showing how much they're spending on credit, this could be a bit concerning, or at least I find it concerning, because people are certainly not spending or not saving to the extent that they are spending. You know, that one anomaly there in the top chart is probably due to income tax returns, people filing and getting their refunds at that time. So they got a bump in their savings for a short period of time, but then spent that money. And as consumer debt continues to be high and interest rates continue to be high based on the short-term interest rates being hiked by the Feds and talking about continuing to hike those short-term interest rates, that can be very problematic for payments. What's interesting to note, that delinquencies on auto payments for subprime auto loans is up 6%, just over. That's 60-day delinquencies. That's a lot. Third quarter GDP, also a market mover this week, came out. It's the first reading for third quarter. It was up 4.5%. This is much better than expectations, but that is, again, because consumers continue to spend on credit cards. But what we're not seeing being reported is the fact that the savings are way down from what we're used to seeing by consumers. They're spending without any cause and recourse for what they're saving. Jobless claims up, initial claims up 10,000 week over week. And what's interesting was continuing claims were up 63,000 week over week. So what this suggests is that while people may not necessarily be getting laid off, those people that have been laid off or are still looking for jobs, they are not finding new employment that quickly. So that's a large increase for continuing claims. And then also mortgage applications week over week, purchases were down 2%, but refis were up 2%. So again, certainly worth looking at. A third of the volume that was closed last month were refi transactions. That speaks to the problems people are having with the debt they carry right now. It may not be a bad idea to refinance, even if your interest rate is 7%. If you carry enough debt and those minimum payments are really stretching you, it might behoove you to actually look at refinancing to see if you can bring your overall financial obligation down by consolidating that debt through the equity in your home. So let's take a look at the charts. This week has been an interesting week. We're having a tough time getting past this little barrier here at the end of the week. We've made up some ground, but just haven't been able to break through, and how we end this day could dictate where we move into next week. If we can get above this little line here, that might mean we'll see some increase in improvements in the interest rates. But if we can't break through, then we're still going to have some tough sledding on interest rates. If you have any questions, I do appreciate you reaching out to me. I'll be happy to answer any of those questions that you have. I do appreciate when you like, share, and comment on my videos. Otherwise, I hope you have a great weekend, and I will see you next week.